disconnected there. All right, there we go. I think that's better now. I think you can hear me. Can you hear me now? Let's see if we can do that. Let's just double check. There you go. There we go. All right. Good morning, good afternoon, and good evening. Looks like it is TGIF. Thank God it's Friday. And you can see the euro kind of backing off a little bit, but still higher than yesterday. Take a look at it on J4X here. Where are we? Right there. There we are. Yeah. 118s when we I think during the webinar it was 117.60, 117.55. Farkash, how you doing? Farkash, what do you think of today, huh? It's the Friday. Euro's holding real well. Hello to you too. And let's see, what else can we say about that? The strength in the cable, weakness in the dollar. Matter of fact, it was interesting. I remember we were looking at the dollar index. Someone asked me about it yesterday out of all the questions, and the next thing we know is that the dollar index was where was it? It was down even lower. That was the amazing thing. It was going up, and then all of a sudden at the end of the day it was down into the sell again. So, and then gold has, what's it? I think we've seen gold firm and up at all-time highs again. Let's double check that. Let's see. So the dollar is going down. And there it is in the spot. You can see trading at 119.76. So we're basically playing with the all-time highs. Let's take a look at it here. Not there, right there. That's Silverado. And there it is, gold. Yes, took out the highs today. Got up to 119.81. Took out 2 days highs, 2 days back. So let's see. I haven't yet decided what to ask. I'm checking some markets. No, take your time. Best thing of all is asking something that has some value to you. That's the key. I learn from it, and obviously you learn from it, or we at least find out if something does make sense or doesn't make sense a lot of times. Take your time. No rush. We'll look around, see what's going on. Like I said, you can see the gold holding firm, dollar sliding down. Let's take a look at the cable. See what the cable's doing here. There's cable dollar. We're through the 31s, battling their way to the 32s, so it's even stronger now. And look at the way it's becoming docile with the fast-moving Stoke, but at the top of the range. What a nice little angle that is. Let's see what it looks like on the Chicago Quant. La 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 la. Let's see. Nope, not there. Right there. That's what it is. Yeah. Just banging away, moving up. That's what it does. Right there. You can see that. The strength is there. Dollars are being sold. Gold is being bought. Pairs are being bought. Can you help me with a general trading tip? Sure. From your past experience. Sure. Something to help me evolve. Interesting. Back testing to me after 40 years of trading, to me back testing is the best of all. In other words, you go back and you find an indicator structure that you like, you back test it, and you keep on back testing it. And every day you back test for a half hour looking at the previous day. And what you do is you just keep on back testing, and what'll happen is it gives you confidence to make a trade. It gives you confidence to know when the trade is going wrong a lot of the time. I mean a lot of the time. It could be anywhere from 65-70% to 80-90% of the time you can tell that something's going wrong. If you back test, it's just like being a athlete, and they train every day. And so if you train every day in trading, before markets open, even sometimes after markets close, if you back test constantly, just a half hour here and a half hour there every day, what you'll find is you will have a better understanding of what you're doing. And I think that's like the best of all. And then what you do is you constantly have like two charts going. You're trying to modify. You got your best chart, and then you're experimenting with a second chart. Don't delete your best chart. And when you go to change things, do it on the second chart. And this way you always have a fallback to the original chart that is the best you've discovered so far. And so it's backtesting over and over and over again. How does backtesting work? In branching, let's see, branching market Rhines. How do I consolidate the backtesting results between the different market Rhines, considering market Rhine changes from time to time? I'll show you. Let's go to. I've been backtesting the day. I've been backtesting the Russell 2000. And I started off. I'm looking at 369 ticks right there. At the same time, I have a 3,609 tick one. I'm looking as an overall trend. These two, the S&P, I can get rid of and move this down because I just have them on there. And so, what you're doing is you're back testing. And then what I was doing, let's see if I have the 396. Do I have the 396? I think I deleted that because this has been the better. I was doing 396. Now I'm doing 369. And what you do is you're constantly looking to see, like in this case here, I'm looking at my time manifolds and they're too tight, and I'm looking at the bars going up. The super, this is the Gasline Super 31. So what happens is that the very dark ones are a 31 average, and the light blues are a 3 average, and it's a 10-to-1 ratio. And a lot of times, when the green line makes it through the time manifold, and then the light cyan histogram is moving up, we get strength. And I double check that, see if that works the same way on the downside, and I watch it, and then you see it one here, where the first move, not bad, and it makes a little profit there, but not too high. I look at it and I see where it closed at 87.40, so I'm thinking 87.30 bid, and then it runs to 88.20, so it has about a full point into it. And then you can see the second bar here, when it does that off of this big one, it goes minus, not minus, but it starts to drop below the first one, and the histogram is starting to challenge the histogram, and the green line is underneath the histogram. Obviously there's no way I want to try to buy that or even be long in it anymore. Now it's telling me that it wants to break down. I see the double dots, and I can see this is underneath the dark blue 31, and the lines underneath, and you can see that it's working its way down. And that's how you would use your in this case here, I'm watching the 369. I will start. I don't have much lower to go, so I'm not. I'm at the bottom of this, so I have to change more parameters of not amounts in the contract bar itself. I have to come out with a new one, but I will not get rid of this. I will save this, and I will find, I'll go like, copy, and then what I will do is, let's see, I'll show you now, just a generality. I will copy it, I will paste it, and now I'll move this over to here, competing these two, and now I've got to come up with a different parameter shift. And I'm down to the lowest parameter on the numbers. I can go from 3,000 but down to 369. I always stay inside the Tesla numbers. I might fool around with 396. Let's see what 396 looks like. I think I had 396 on there before, or maybe, but let's just take a look at it. And I remember that the 396 was better. I could go with 3 maybe, just to try that and see if it has the different characteristics that I'm looking for a little bit better. Notice it doesn't have this little hitch there, and it shows a little bit more strength with no dot there, so it kind of shows me the continuity. And so I check and see if I can get this chart here to beat this chart here more consistently, and if not, I go back to this and I go look for another parameter. You see what I'm saying there? Does that make sense to you, for cash? Let's see. Hey Titus, how you doing? Long time no see. What's cooking? What's shaking, bacon? In computing the problem of merging data, such as backtesting results, is a very prominent problem. It's merging the data. Very complicated to do it properly. I definitively need more backtesting experience. Right. You just want to keep on. Did you understand how I showed how I do it there? Where I'm using two charts all the time. You know, and I'm not changing the good chart that I have, which I consider the best. And now what I would do is I would keep on checking this. And now where this broke down here, and I look at the time, and I'm comparing it at the time, 403. Is that 4? Yeah, 403. I go over here and look at the 403. That's 404. So it's a minute earlier this side, and that's how I do it. And as I just constantly go over and over and over again. So that's the best thing you can do. That's the best way to back test, and just keep on back testing until you have confidence in your system and you have some rules designed to tell you when to be long and when to be short, or when to be long and when to be out, or when to be short or when not to have a position on. Either one of those. You are taking an evolutionary approach, it seems, always remembering the best. Correct. And saving the best. Exactly. Yes. Exactly. In this case here, the overall, let's go up and take a look at the bigger chart. I'm looking at the big broad view, and it's in a very strange situation at the moment. You can see the 31 is staying plus, but all the green lines have been underneath and lots of red dots, and the pressure is down. Now, what I interpret out of that, as from experience before, is that it will turn around and start to move back up. Notice it's going to be more than likely, the odds are very heavy that it'll make a higher low and start to turn. And since the green line is now buried down at the bottom end of the range, if it starts to turn up and we start to get green dots, it's telling me that we're probably going to go challenge this higher area here. And that's how I use that for the big, broader scale, or the longer view. And then, I'm like in this case here, I know that my shorts, I'm not crazy about shorts because of that histogram being plus. As much as it fell down, it did it with it going in and out, which was fine. But it makes me leery of trying to be short because of that, because the histogram has found a way to get plus in here again. See how it did that on the big broader view? And when you go back and look at it, now it's a little bit choppy today. Right there is it's a little bit smoother. Matter of fact, why is it only going back to... Oh, I see. There we go. You can see it's much smoother going back. Today is really choppy in here. Going back 10 days, it's a much smoother action, telling me that same story. Just like here, it was constantly being minus. I knew that not trusting the ups is a better idea. And then looking at the short term, I go back and compare that to that area and see when it first breaks here, is it a good trade with it minus like that? And usually it is. And so that constant retesting and testing, just like an athlete who trains every day. Same thing with trading. Train every day and you will build more discipline over and over and over again. Let's see. Best current. Let's see. You are taking an evolution. The best current system, right? What time frame do you trade? That's a good question, Titus. That's a good question. Do you think one should use several diversified trading systems to lower trading risk? Yeah, two charts are very helpful. And our gas line indicator helps that out too. It does that. It has a couple things. That's what the supers do. There are two different indicators, really packed into one. I like, when it comes to the public indicators, I like a fast-moving stochastic and a slow-moving stochastic. And as you can see on Dukascopy here, let's show you there. And then what we're using is the Hinky-Ashi now, as our dots on there, and it has like a 75% correlation, which is pretty cool. You see where the fast-moving stochastic broke through the slow? We had green bars, and it shows strength. Same thing here. See here where it breaks down? The fast breaks down, and we have red bars. See, it's moved down. Same thing here. It breaks down, down. And you can see here, same situation, moving up. I wonder if I can move that line. Can we move that line? No, I can't. Marker. Let's see if we can remove that. There we go. And then, so basically, same thing here. It breaks the fast-moving. Breaks the slow, and that also has about a 65-70% correlation with our math, about 65%. So it's not bad, And then a combination of money management, will help you out. Let's see. And what time frame are you using? Aren't you using like 4 hour and things like that? 2 hour? I think we've put some charts up. 2 charts too. Sometimes something unclear on a chart appears to be easy to understand on the other one. Exactly. I like what Titus said. I agree with that. And so that's where we are. And then we go back to this. We can see what it's doing live here. We can look at currencies the same way. You can see here. See, here's that bounce that we're talking about, because that histogram is plus. Now we're watching for this to go plus. The blue right in here. Matter of fact, if the blue histogram turns plus, we could possibly see some real good strength in this move. We start getting some green dots here. And that's what I was suggesting here with the big longer term. And this is a 3,690 contract bar. Extending it out dramatically. You see, I trade 1 hour based biased by longer term, daily trend, and fundamentals. Basically, I take trades on the 1 hour chart, but the daily must agree with it. Right, exactly. I like that. I use various online sources for fundamentals. There you go. And if you constantly do a half hour of back testing, you're going to build more and more discipline over and over, muscle memory. It'll just keep on, popping in more and more, and that's the real key to it all in the end result. That muscle memory, and not to make trading mistakes. So, I think that's the answer to it all. I really do. I think that's the key. Constant practice over and over. I'm not a big fan of minute charts, but you do what you do. You know what I mean? If that's what benefits you, then you do it. In other words, you back tested, you see that you have success with the minute charts, then that's what you do, and it makes sense to do that and stay with it. Or hourly charts or whatever it is. I like to refer to hourly as minute, and so or minutes, and so that is the key to the whole thing. Of trading. No, not necessarily after each trade. Back test before you start trading in the morning, and back test in the evening when you're not trading. Do a quick 15, 20 minutes, 30 minutes. Just a quick back test of and as you constantly build up, now you have, like, you can go back and look at what the day did in the evening, and then the next morning you go back test again to see what it did that last evening, and see how it's following, if it's slow in the evening in the product you're trading, or if it's active. You can learn a lot of things from those back tests. And this way you don't step into any real problems. The problem with the minute charts is that some lazy finger could trigger big random trades, just a head scratch, and blam, the trade moves in another minute candle. Right. I'm talking about hourly charts. I'm talking about, I just refer to them as minutes, because I do ticks and contracts. I don't do things in minutes. So in other words, a 4 hour chart to me is minutes. It just happens to be 240 minutes. That's all. An hour chart is 60 minutes. To me, they're all, minute charts. See what I'm saying? But I agree with you. 1 minute charts can be way deceiving. And as you can see here with my 369, or in this case here it's the 369. So you can see here uh, that bar closed. Or see, let's go back. There you go. 7:30 and 50 seconds. Then the next bar was 43 and 50 seconds. That's 13 minutes later. Let's go back to this one. That one was 21:20, and that was 9 minutes. And then this one was 10:44 to 11:21. It's 11 minute. And so now this one, let's see, what is it? This has 207 contracts to go. It started at 7:50. 7:50? Let's see. I guess it might have closed at 7:43, and now it's going over 7 minutes, and it's not even halfway there. So I mean, it's possible it could go 13 minutes or 14 minutes or 12 minutes. This one. Turkish Lira. Yeah, let's take a look at that. Let's see. Let's get to today's charts if possible. Oh, most definitely. So let's take a look at the Turkish Lira. That has been fascinating in the sense of we finally figured out what the story was. It was nothing I was thinking it would be. I really thought they found like some type of deal. Would have been nice. I guess that's too optimistic. I'm always hoping for the best. You can see here Turkish Lira line 17. We are 34 days in a buy. I'm sorry, yeah, 34 weeks in a buy, and 3 days in a buy. And you can see it looks a little firm in there. Not not a lot. No virus. Basically, I think we saw it last night up at 7:01. Let's take a look at it here. Yeah, it got up to 7:01 last night and yesterday, and then last night itself after the markets closed, it was 699.6. It's moving down. You can see the line here. The slow stochastic or the fast stochastic here is still on an angle. It's turning, but it's not turned down yet compared to our work at the moment. And green dots for the last 4 days, and you can see green bars for the last 5 days. And so that strength is starting to peter out a little bit because this Henki is a little bit trapped. It's like an inside bar. And that's another thing. You could look at inside bars and outside bars, that type of thing. Let's see. There is a wind of war coming from Greece and Turkey over Cyprus divisions. I remember when I was young. They fought that civil war, and it was two NATO countries at the time, and it was very strange. But it seemed to slowly evolve into a truce, and I guess what I'm saying is that right now I don't think they can go fight for the island again. I think that that won't happen. Just because of the level of military ability compared to what it was before. Turkey is in Libya battling it away with 10,000 mercenaries. They're dealing with northern Syria. They're dealing with the Kurds. They're doing some strange things against the French. I really have a hard time believing that they want to start another conflict. Something like that could, create real problems more than the general problems they have now. We've seen their currency go from 1.5 to 7 under Prime Minister / President Aragon. So I'm not really sure if there's room for anything more than just push and shove more than anything else. Also, the weaponry has really advanced compared to the Cyprus or the Greek Turkish civil war in Cyprus. I mean, we're looking at a much more sophisticated military ability. I wouldn't be so fast to believe that they're going to go into a shooting war, whereas they can fight with Syria or Libya or the Kurds to a great extent. They really can't pull that stuff against the the Greeks. I think they'd have some real problems there. Titus says, "What about dollar, Doc? Do you think it will lose more against all the other currencies?" I was looking for the dollar. We've been saying that for weeks upon weeks. We're looking for a dollar in the 87s, 86s. So let's see where it is on J4X. Seems like we're down in that range. I guess as long as we keep on seeing, there it is right there. Yeah, we're at 92. No, we haven't even gone down to as low as I think. I think it can go lower. I do think we're going to see, the high 80s. In many ways, that's kind of positive for the United States. That will open a doorway if the world starts to grow a little bit and a lower costing dollar. It'll pump up, exports, and that's something that we're really hoping for around here. So at the same time as the dollar goes down, places like China, remember this is hurting China. It doesn't help China when the dollar goes down, and I guess they're really trapped. They can't really go anywhere else. How can they put $1 trillion into something? Maybe they buy a few more euros, that type of thing. But overall, China is the one that's getting hurt by that. Whereas in the United States, we don't really feel it that much. Excuse me. Oh, there's a yawn. Long week, I guess. What it really shows us is that in the scheme of things, the United States is an island of its own. In other words, we talked about this yesterday. The dollar might be going down, but I can still buy 4 or 5 different automobile companies, or 6 or 7, in dollar terms. So it's not going to really have any real effect on the cost of the car. Or I can buy housing. It's not going to have an effect on the wood and the materials and the white goods, as they call them, like the washer and dryers and things like that, because they're usually made of white steel. And we have steel manufacturing domestically, so it's not going to drive those prices up. So in other words, we grow our own food here. We don't have to worry about importing food. So in other words, we see a lot less of the effect of a weak currency than most other countries, because we really can. We are the most capitalist society in the planet, and so we really have more production and companies competing with each other than any other country in the world. So it really makes it hard for the inflation to really kick up much from it. Does that make any sense? And so to me, I was looking for, let me show you what I was looking for when it comes to the dollar. I've been thinking that for a while. It was going to support like lows here, and then probably, all along here. And then last would be the 87, 88 area, this down in here. And so that's more than likely where I'm thinking about it. It does look like it's making a nice little drop there. That will anger the Chinese, obviously, because they have about $1 trillion invested in U.S. Treasury bonds. It's their bank account, and so and more than likely they're not buying more bonds, which what they should do. Bonds themselves. Let's see if we can see the 10-year. Let's look at the 10-year. Let's see if we can do that on here too. Let's see. Did we look at the 10? There's the Treasury bond. It's going up in price, which means the yield is going down. So as much as the currency is moving, it's not really being influenced on the interest rates. Matter of fact, let's take a look where the yield is. Let's see. And the answer to that is, well, usually it's there. There it is. I'm going to take a quick look at the rate of the 10-year. And last I saw, and this is like a couple days ago because I wasn't really looking at it that closely of late, but it was in the 58 area, I think it was. 54, almost 55. So interest rates are dropping. Okay. They just keep on dropping more. And the 10-year was in the 30s. One point last time we talked about this on the webinar, I remember the 10-year was like 129, 1.29 or 1.3, something like that. It's trading at 121.3, so it's dropped 9. So overall, interest rates are still coming down. Normally during inflationary periods, from a currency, your interest rates go up. In this case here, they're going down. So, let's see. Farkash says, sometimes it seems like lawless Chinese markets are more capitalistic. Nah, they're fascist. People get confused by capitalism and fascism. If one ignores the large state enterprise that distorts the markets. China is more of a fascist structure. It's less than a capitalist structure. I mean, they give some room, but remember, the idea of capitalism is to respect property rights. And China has no respect for property rights. So, if the U.S. Treasury bond goes up, then the rates go down. Correct. I'm not familiar with the bond stuff. Yeah, I hear you. That's why they've created different ETFs to try to do the reverse of it. People get confused by that. When the price of the bond goes up, interest rates are going down. And then when interest rates are going up, the price of the bond goes down. And so, yes, that's I hear you there. You're not the only one. A lot of people have that issue. A long time. I've been hearing people say that to me for decades. And then I trade options in there. Boy, that usually really blows a cork or something for a person I'm talking with. They're like, you're trading what? You're trading options on those things? So how do you do that? Okay, I think the main difference between communism and fascism is that communism is international like USSR, while fascism is nationalistic like NK or my country, Romania. I try not to look at it that way. Solely because, again, I think it's more of the left trying to hide. That's all they're trying to do is hide that they're left or as communist. So in other words, communism and fascism to me are both the same. There's no difference. The only difference is that the fascists are, if they call themselves fascists, then it's kind of surprising. But to me, when you don't respect property rights, they also have another name for it too, crony capitalism. In other words, your friend is allowed to be a capitalist, but everybody else is not allowed to be. So to me, communism and fascism and all that is all one thing. Socialism, they're all one thing because in the end result, what they do is they take out the main problem for communists or fascists, and that is they want to take your property. And when it's a communist or a fascist structure, they have the laws in support of them taking your property. Whereas in capitalism, you're not allowed to take other people's property. So that's really what the problem is. It's really property rights in the end. So in other words, you build something, you make something, you create something, and if your government's allowed to take it from you, then that's a little slice of communism or fascism, one or the other. Take your choice, depending on how they take it from you. I guess in communism, you're not allowed to start off having it to begin with, whereas in fascism, you're allowed to have it, but they can still take it from you. Let's see, communist Romania until 1982. Yeah, Ceausescu and all like that, and his wife, and I remember all that. U.S. Dems are really near fascist. Yeah, that's where they are at the moment. They're like a cross between fascist and communist, and their policies are that, and they're the number one, the most popular. One of their most popular candidates this year is a out-known communist. That's Bernie Sanders. So, yeah, it's and Biden is not much of a difference. So, Titus, aren't U.S. Dems let's see. Yeah, that's an interesting word. I can't even enunciate it. Communitarian, multiracial, positive discrimination. Yeah, that's one way of looking at it. Discrimination. That would make them statist internationalists. Yeah, they're look they're trying to take. They're always trying to take something from somebody and give it to their insiders. That's fascism. And then they all benefit, the insiders and the one they gave it to. And so that's the way China seems to function. Um, property rights in China is almost non-existent. So even to the point where if you text something and it's negative against the government will go in and lower your credit score or even reduce your borrowing power. So I mean, that's talk about the carrot and the stick, you know. So yeah, that's what's going on. So I don't until we start to see interest rates really have a problem. Matter of fact, the Chinese are probably doing okay for what they're losing in dollar. They're gaining in appreciation of their bond portfolio. So they're probably not that panicked about it. And anybody else who's invested, over 40 some odd percent of the world owns U.S. Treasury bonds. And the rest are owned by, 50 some odd percent are owned by the United States. Americans and so forth, and Fed and whatever. So in the end result is that inflation is not really kicking up, and we have room for the dollar to go down into the 80s. And so, we can see there's the Treasury bond. So what we can see is, and here's a good example. See how on the Dukascopy it says bond 181.93? Well, people, when that bond was issued, the bond was issued at 1.00. So you've made 81 cents on the dollar, basically, of that bond. So almost doubling. That's why bond funds are bond funds. They are able to do that. That would make them okay. Yep. I agree, guys. So, in the end result is that you need free markets and free people as much as possible for growth, and without it, we all go sideways. So, all right, now let's jump over to, where do we go? Anybody have anything else to see? We can jump over to something else. Let's go to Canadian. Canadian went into a daily buy there yesterday. Let's take a look at that. Right there. Let's take a look at it up here. That was an interesting spike there. I guess that was maybe the testimony of that we situation. I'm not sure. I mean, oil is going down, so that could be a part of it also. Oil did go into let's do that on J4X. You see same thing there. And also at the same time, we can use a double screen here like this. And then oil did take a little pounce on the downside there yesterday. So that could have been the pressure we saw on the Canadian. Usually that seems to be it. And gold is moving up at the same time. That would make them okay. Gold, yeah, we can take a look at the gold again. Gold, made new highs today, new all-time highs in dollar terms. Right there. And you can see the strength there. You see the fast-moving stochastic coming down and meeting the slow one. So there was some pressure on it in there somewhere at one point. Let's take a look at it here. There it is there. You see it's coming off of its highs today. Let's see if we can widen that a little bit more. But still up for the day. And you can see our white line is, let's move that over. It down dipped and turned back up again. More data came in on this one again. More data came in. And so this was pushing into a sell found a way to be a green dot and be up again. They put the trades in later on in the evening, which is really disappointing with this in particular situation right now. What platform are you using there in the background? The one that's not J4X. That is multi-chart. I've been using something of that nature now for decades. The trade station from the Crude brothers back in '91. I was a beta tester, and then multi-charts is kind of like an evolutionary advancement of individual charts since TradeStation stopped using individual charts. They only supply it as a platform. So that is that. You can see that right there. You can see that the gold is showing some life. Now what's interesting is you can see also at the same time silver is having its issues of trying to get going. It's not taking out the highs of a couple days ago. But this battle goes on and on and on. Let's see what it looks like here on J4X. Look at the way the fast-moving Stoke broke down in here a couple days ago at that high. And it's been a sideways market ever since. So it tells us that the metals don't really have many sellers. I was saying that to Robin yesterday. More than likely, it'll be buyers by the afternoon again somewhere. It seems like that's the way it rolls constantly. Constant buying in this product. It's very hard for anybody. I don't understand how, with the way the news is and the virus and all the crazy and China Sea, South China Sea, and Cyprus and the Mediterranean. It's awful hard to believe that anybody could feel comfortable by selling gold or silver short. But it seems like it happens. I mean, someone saw it run up to 76 a couple of days ago, and they slammed it down $75 for about 3 or 4 hours, and then it came roaring back. So it is hard to believe. Very hard to believe. But we do see things like that. We see it could be, a lot of times we interpret it as currency translation. Like we always try to justify the $11.71 low in silver in the middle of the pandemic back in March. It's like, how can anybody do that unless they are having to liquidate at such an incredible rate? It doesn't make a lot of sense. That's why we thought that we were going to see a new highs, new yearly highs in the silver, because the distortion of the selling down to 1171. You just had to assume that forced some seesaw effect. It always does when you get some extreme like that doesn't make any sense. So that was where my head was at the time. So that is the answer to that. What you need to do is, basically going back to the original question, and that is backtest for a half hour, 15 minutes every day in the morning before you start trading, and 15 or half hour after the day. And that will help build the muscle memory. And then as you go to look at all these products, then you have a better chance of trading them. And as we go through the charts now, you can see that there's some really good action. Let's see. Let's look at that Swiss. The Swiss has been riding south for weeks. Same thing with the yen too. I mean, the yen. We'll take a look at the yen next. Look at that. I mean, they just keep on pushing the Swiss down, which obviously, as far as I'm concerned, it's an inverse relationship with the dollar. So, well, I mean, in other words, the Swiss is going to keep on going down and become more valuable as the dollar keeps on falling. Now, at the same time, it's kind of funny at the same time, and that is that the yen does the same thing. The pressure is on the yen just the same way. Now you can see there, Swiss is pretty much unchanged for the day, and there is the yen. It's popping up a little bit, which to me is usually curious, but that has been in And look at it. It's very close to a daily buy. It has been in, where is it at? Line 19, right? Yeah. 21 days in a daily sell. 21 days, traders. Now, boy, looking around at the charts as we all do, you have to figure that there must be a trade in there somewhere. I really wish we saw the weekly lifting up more. You can see it's not. You can see on J4X, though, that the fast stochastic is trying to dash its way up to the slow and try to get across it. We'll see how well that does. Matter of fact, just now it looks at it. I don't think we had that green dot there, did we? We got a green dot now and a red dot, a volatility signal on the yen. So the yen could be a possibly good trade for a bounce here. Which then, bigger question is, does that mean the dollar starts to pick up some steam? You know, the dollar and the yen seem to move along with it. In other words, is that a possible profit taker in the Swiss? You know, that just this little tip off of 3 different charts could be an insinuation, you know, an indication of that little bounce occurring. So traders start thinking that, you know, there might be some action in that direction where the dollar starts to firm a little bit, bounces up, and we start to see some weakness in the metals, and we start to see some weakness in the Swiss where it starts to go back up a little bit, and the same thing with the yen. All right, Titus, good seeing you. Welcome back. Bye-bye. Have a safe and smart weekend. So that's where we are now when it comes to looking at these trends here. So let's see, what else do we have there? And that's how we do that cross-match thing going on. We like to look at that. A lot of times, like we look at the NAS-CAD, which was curious. NAS-CAD jumped back into a buy right there on line 24. Let's take a look at that. That's usually an indication of oil stopping from falling and starting to turn back up again. Right there, NAS-CAD. Now it looks like it is moving back down again. And let's see where we have it on here. Right there. So it made a new high today from yesterday's buy, and then now it's backing off a little bit. And then you can see here, that is, the weekly is not changing anything, and the daily looks relatively comfortable as long as it stays up in here throughout the day. So that could be a insinuation of oil starting to bottom also. Let's take a look at oil. Light Texas sweet. Texas tea. Right there. Yeah, we're back up into the 40s, right? Okay. And I think yesterday, what did they do to the oil? I think they took us down into below 40. Let's just double check there. Yeah, oil fell all the way down to 38.72 yesterday. And now it's trading in the 440s area again. So, and you can see this trying to turn up here on the J4X. So that's the that analogous usually. And then we did see, let's see, maybe there we go. And so that might be what we're seeing at the end of the week here. You know, that shifting gears a little bit. Will it damage crude oil? I know it's in a daily sell, but is it fighting to go back into the daily buy? Yeah, look at it. It's trying to go back to the daily buy already. So, you know, this thing is moving along in a very positive direction. I understood that, I guess the Wednesday night numbers drove it high. You know, they said that it was a very, big number, I guess it was. I guess that's what it was, Wednesday. And then, you can see that big Monday day it had. And then the numbers came out good on Wednesday night. And then there was a gapish action down on Thursday. Something else must have come out and, they slammed it. So, we just watch the numbers and trade them. And that's why, again, we try to do the back testing at least 15 minutes to a half hour every day before you start the trade, and 15 to a half hour after you've traded, just take a quick look, maybe not as intense as the first one. And if you do that every day, you build the muscle memory not to do things that will work against your trades. And at least you're, combined with money management of stop and so forth, that will be even better for you. And that's usually the way it usually works out very well in the end. Because usually the key to not getting beat up is to have small losses, because you can always make the gains again. But if you have a big loss because you're betting on something, then it's awful hard to get out of that. So one of the big ones I'm always telling everybody, try not to have the big losses. Let's see. Lots of little ones are all right, but not one big one or two, because then it just sets you backwards. And if you broke your rules at the same time, it really puts you out there into a confusion. Let's see. I can't tell you how many traders I've seen I'm buying more now. But you said you wanted to be long, and it's going down. Yeah, I'm buying more. All right then, but you said you wanted to be long from here, and now you're $4 underneath it. Yeah, I know, but I'm buying still. Why? Does your work tell you to buy? No, but I'm buying anyway. It's like, whoop. They're usually gone after a couple of days. All right, so there we are. What do we do now? Let's see. So we looked at that. We looked at gold. Let's take a look at silver. I think we did look at silver, right? Yeah, we did. And silver is trying to muscle its way back up also at the same time. Oh, well, no, look at that. It's still having its issues there with that. Let's see. Out of the currencies, who's left to look at? Or do we go right? Oh, let's take a look at Bitcoin. Bitcoin was in the 11,000 area. It still is. Oh, let's see what we got here. Farkash says, now you made me research how long does it take to build muscle memory in order to learn your backtesting tip. Forever. I've been doing it for 40 years. Keep on doing it. Don't ever walk away from it. When you walk away from it, it's when you do foolish things. I've learned that lesson many a time. What oscillator is the white line on J4X? That is the fast-moving stochastic, and we'll show you what the numbers are right there. We'll just click on it, and you can see that. So it is a 5 and 3, and it's a fast-moving stochastic. And we're using the fast D. That's what you see there. And the slow is a slow D, and it is 9 and 6. So the fast is 5 and 3 with the fast D, and the slow D is 9, 6, and it says a 1 on there too, with the low, and that I think the slow one has a little bit more data that you need to put in there. But that's, you see that there? I'll do it one more time for you. And go with this Hinky Ashy too. It'll emulate my dots, so that helps out, gives you a little flavor of the running. Let's see, I hear somebody. Who was that? A friend, a former compatriot of yours, a family member of mine, into the marriage side. We have a lot of Romanian in us too. Matter of fact, I even have a Romanian tractor. The long, Long. It's manufactured in South Carolina, but it is a Romanian tractor, designed from Romania. We have a lot of family members, and they speak Romanian, and they go back and forth. So let's see. Was it what else? Okay, I answered that. Let's see. Daniel from Romania too. Okay, there you go. Yeah, and I am a quarter Romanian myself. So our family came over in 1870s, 1880s from Romania. So they came over 2 centuries ago now. In the 1870s, which is like 150 some odd years ago. But we have family members. Matter of fact, I think we might even have a wedding in Romania one day. Someone in one of my children wants to get married in Romania. So anything's possible. You might find me in Romania. We'll all get together. I'll be buying the beers. Let's see. What else can we say about all this? I guess that's about it. That's Bitcoin. Bitcoin is holding up. You can see on our spreadsheet, the fact check spreadsheet, it was 1 week in a buy for this whole move. It caught the whole thing, and 10 days in a buy. So for 2 weeks, you couldn't be short. That's for sure. Bitcoin seems to be holding up. Let's see what we have it over on our work. Let's see, where's it at? Right there? Yeah, right there. There it is. You can see still in the buy, just pushing along. Yeah, just whoop. Can you see all that? I think you can see all that. Yeah, just pushing along. I guess I can move that down a little bit more. Does that help? See if that helps any. So, all right, Daniel, you take care. Have a safe and smart weekend. You all be good. Same thing, Farkash, same thing. And we will catch you all on Monday. We should call today's webinar. What should we call today's webinar? I think today's webinar is. Let me think. What is today's webinar? Let's say backtesting. What's up with this thing? There it is. 08. Right. Okay. 08 and no, not 08. All right. Now let's go take a look at Think. And we go like that. And let's put up a title for this. Yesterday I put the title up and I ran away. I got so involved. Our internet's been really wonky lately. Let's see. It's been slow. Title. How to back test I think that is a good one. Backtest charts or backtest charts. How's that? Okay. Anyway, this is Doc from North America saying arrivederci to all. Oh, wait a minute. I used CCI Merrimath to go in a way similar to quant indicators. Yes, CCI is very good. That's another one. It's really a stochastic CCI. It really is. CCI is very good. I used to use that on J4X at one time. I think compare CCI to the slow and fast stochastic I'm using now on J4X. I think that might be better. Last I tested it, it was. All right, I'm out of here. We will catch you all on Monday. So, happy trails to you until we meet again. Happy trails to you, to all my trails.